Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us, and after CPI yesterday, we got to see a good amount of selling pressure on the chart of gold. Gold made a low of around 1939.40, and after that we can see that gold is trying to recover. Gold muted as Fed decision looms. You can see here the Fed is widely expected to pause its aggressive tightening cycle on Wednesday after data showed that inflation cooled more than expected in May. Yes, the inflation has come down, as a result of which the market is expecting that in today's FOMC there will not be any rate hikes. This is forexfactory.com, and you can see that in my time zone around 11:30 p.m. we are about to have the FOMC statement. So please check the time zone in your country. Just go to forexfactory.com or any economy calendar and be ready for some volatility. Okay, and as I always say, beginners, new traders with low capital, try to close on all your US dollar positions, because news trading means crazy volatility in the market. Even your stop losses may not work. So if you look at a chart of DXY US dollar index, then yesterday after the news we saw that market respected our support. Usually I always say that try to follow the trend of the market, but if you watched my video yesterday, then I told you that there's a high chance that we will get to see some price rejection. Okay, and as expected we got the price rejection we were waiting, and more or less our level also worked. Right now we can see that DXY is standing at 103.32 and still sustaining itself above the support level. So my dear friends, the support level is very important for DXY, and DXY will try its best to sustain above 103 level. DXY will try its best to survive above this level here. And I think that during the day, if DXY shows some red candle also, it will try to respect the 200 moving average, and more or less it will try to maintain the present structure of the market. And if we look at the chart carefully, then we can see that we have a wedge pattern here on the chart. The whatever I'm going to speak right now, it may sound a little bit complicated, so please listen to me carefully. So whenever we get to see we hear about news like there will not be any rate hikes, okay, so usually dollar goes down. Whenever there is an rate hike, okay, it's positive for dollar and bad for gold. So today if the Fed pauses the rate hike, then obviously it will be bad for dollar, isn't it? And it will be good for gold. So if they pause the rate hike, so DXY should be going down, isn't it? But we can see that we have a falling wedge pattern. It means that there is a high chance that we may get to see market reacting in the opposite direction. As we all know it very well that news trading is very difficult. News trading is complicated, and charts speak before the news sometimes. So if we listen to the market sentiment, then the market sentiment is pointing towards a downside on DXY. But if you look at the chart, then chart is speaking a different story. Chart is saying that there is a high chance that market has already digested the pause of rate hike, and we may get to see further upside on the chart of DXY. So we will get to know after the news only. Let's wait and watch how the market performs. Now this is the 1 hour chart of gold, and just like yesterday, gold is inside the range. Yesterday we talked about the range of gold, and the range of gold is still the same. The strongest sellers are present around 1982-83 level. Okay, here we have the strongest sellers present around 80 to 83 level. After news, if you see gold going up, then you can expect market to face some selling pressure around this area. If market reverses, we can go for a sell. Right now market is standing in 1948 1950 range, so 1983 is far away, but during the news we may get to see a move of 300 pips on a single candle. That's why we are discussing about 1983. After news, if market starts going up, you can expect 1983 to act as resistance. Usually levels do not work when fundamentals dominate the market, but in this market situation again, I'm positive that the levels will work. So 1983 has a high chance of acting as resistance. If market reverses, we can definitely go for a sell position. But before 1983, we also have some resistance around 1972 to 1973 level. 1983 is the strongest resistance and 1972-73 is a moderate medium resistance on the chart of gold here. Again, during after news, after FOMC, if the market is not very volatile, but still you can, if you see the market is going up, then you can expect 72-73 to work as resistance. And if market hits 72-73 level before FOMC, then obviously you can expect the resistance to work. If market shows price rejection from above, if you see market struggling around this area, will give you the confirmation that sellers are present and you can look for a sell. These are the two strong resistances on the chart of gold right now, as gold is trading inside a range. We can see a sideways market. On the other hand, before FOMC, listen to me carefully, before FOMC, if we see gold going up, then right now you can see that around previous support here, market is facing some selling pressure, means price action is working here. So during the day, if market hits 1955 level, then we have a strong resistance around 1955 to 59 level. Why? You can see I have taken the help of Fibonacci here. Here we have Fibonacci 50% retracement level. Along with that, we also have multiple moving averages. We have the 50 moving average, 100 moving average, 200 moving average around this area, as a result of which we can expect that before FOMC, when the market is not under the influence of news, 1955-59 has a high chance of working as a strong resistance. If market reverses before news from this level, we can also look for a sell, 55-59. But yes, confirmation is important. So these are the three levels where we can expect the market to face the power of sellers, and accordingly we can plan our trades and take sell position. 73, 83 are the levels, okay, that have the potential strength to work after the news, but 59 to 55 is a level that should only work before news. After news, it does not have the capacity. Not all the levels are of the equal strength. And before news, if the volatility of the market remains low, if the volatility of the market remains low, then obviously you can expect 1939 to 40 to act as the support here, or the level from where market bounced. Forex being a decentralized market, your levels may vary. So around previous support, yesterday's low, or 1939.40, you can expect the market to act as support before news if the volatility of the market is low, especially during the European session and Asian session. But in case market shows good volatility, if you see the market is going down with red candles, then obviously 39.40 will not work, because already it has done the job couple of times. In that case, your focus should be on 1932 to 1933. And to be honest, we only have a reliable support around 1932-33 only before news. After news, we don't have any support, because two support we have right now, but both the support does not have the power strength to hold the market if market starts falling after news. And if gold breaks 1932-1931 level, you can see that we do not have any immediate support, and we may get to see a good amount of selling if gold breaks 1931-32 level. So if gold breaks 1931-32 level after news, there's a high chance that the selling pressure will continue and we can look for a sell as well. 1931-32-33 is a support before news only. So these are the trading levels on in front of us. If you are holding any buy or sell on the market right now, you can be on the trade, no need to exit. But as I always say, okay, be a trader, not a gambler. So trade on the levels that you understand. Don't try to interpret the market on each and every level. It is not possible for us because we are retail traders. Do not gamble with your hard-earned money. Focus on risk management. This is my analysis. I can be wrong as well. So be careful. Bye-bye. Take care.